What if the secret to building real wealth wasn't hustle, hype, or chasing trends, but calm thinking and patience? In a world where everyone is rushing to get rich overnight, the smartest investors are doing the opposite. They're slowing down. They're thinking clearly. And they're playing the long game. Today, I'll show you how to think like a Stoic investor, using logic, discipline, and patience to create exponential growth over time. Most people lose money not because they lack opportunity, but because they lack emotional control. Fear makes them sell too early. Greed makes them buy too late. But Stoic investors? They stay grounded, no matter what the market does. What is a Stoic investor? A Stoic investor is someone who focuses only on what they can control, ignores noise and emotional reactions, makes decisions based on logic, not hype. This mindset comes from Stoicism, an ancient philosophy practiced by thinkers like Marcus Aurelius and Seneca. Their core belief? You can't control external events, but you can control your response. In investing, this means you can't control the market, but you can control your decisions. To the power of logic over emotion. Let's be honest, markets are emotional. People panic when prices drop. People get greedy when prices rise. But logic tells a different story. A Stoic investor asks, is this asset fundamentally strong? Am I buying based on value or emotion? Will this matter in 5 to 10 years? Instead of reacting to headlines, they rely on research data, long-term vision, because emotional decisions create losses, but logical decisions build wealth. 3. Patience. The real secret to exponential growth. Here's where most people fail. They want results now. But real wealth grows slowly at first. Then something powerful happens, compounding. Money starts making money. And that money makes even more money. At first, growth feels invisible. Then suddenly, it becomes unstoppable. Stoic investors understand this. They don't chase quick wins. They build systems that grow over time. They think in decades, not days. 4 Stoic rules for investing. Let's break down simple Stoic rules you can start using today. 1. Control what you can. You can't control the market. But you can control how much you invest, how often you invest, your risk level. 2. Ignore the noise, news, social media, hype, they're distractions. Focus on your strategy. 3. Embrace volatility. Market drops are not enemies, they're opportunities. 4. Think long-term. Ask yourself, will this decision still make sense in 10 years? 5. Stay consistent. Consistency beats intensity. Small, regular investments grow into massive wealth. 5 real-life example. Imagine 2 investors. One chases trends, panics during crashes, and constantly changes strategy. The other invests consistently, stays calm during downturns, and trusts the process. After 10 to 15 years, the Stoic investor wins, almost every time. Not because they're smarter, but because they're more disciplined. Building wealth isn't about luck. It's about mindset. Think like a Stoic. Stay calm, stay logical, stay patient, and over time, you'll see the power of exponential growth working in your favor. If this changed how you think about money, hit the like button, subscribe to our channel, and share this with someone who needs to start thinking long-term. Because real wealth is built in silence, patience, and discipline. Control your mind. Control your money. Control your future. What if instead of storming through the market like a whirlwind, you approached investing with a strategy akin to watching a seed grow? This is the essence of a Stoic mindset, a calm, unwavering confidence that allows wealth to develop naturally over time. As a Stoic investor, you don't react impulsively to every market shift. Instead, you cultivate your investments much like a gardener tends to their plants, nurturing them daily with thoughtful care and a long-term perspective. Imagine standing before a tree, one that took years to grow and thrive. The Stoic investor understands that just as trees take time to bear fruit, significant financial gains require patience and resilience. Instead of chasing after quick profits, they focus on planting seeds of value that will grow over time, producing a forest of wealth that stands the test of time. This unwavering commitment to long-term growth, coupled with a disciplined approach, sets them apart from many who falter under market pressures. Each decision is made with foresight, recognizing that the ripple effects of today's choices will shape tomorrow's financial landscape. As we navigate this investment journey, let's dive deeper into the Stoic principles that guide each action. The path to understanding begins with the first rule: controlling what you can. By honing in on your investment strategy, determining your budget, and setting your risk tolerance, you arm yourself with the ability to weather any storm. Investing becomes less about jumping on every trend and more about creating a steady rhythm that aligns with your values and long-term goals, effectively shielding yourself from the emotional chaos that often plagues the market. When you focus on manageable aspects, your confidence in your decisions flourishes, paving the way for a more fruitful financial future. By respecting your capacity to control your investments, you inherently reject the allure of impulsive trading. Taking the time to develop a nuanced understanding of the assets around you fosters a sense of security that short-term traders seldom experience. This translates to resisting the siren call of daily market updates and sensational headlines, allowing you to pursue a strategy rooted in data and reason. Embracing this composure opens the door to recognizing opportunities that others may overlook, especially during times of uncertainty. This approach translates into capitalizing on undervalued assets, which could turn the tide in your financial journey. A strong foundation of knowledge paired with deliberate action empowers the Stoic investor to make impactful decisions that resonate throughout the years. Being a Stoic investor also means embracing the inherent volatility of the market. Instead of viewing market drops as setbacks, they see them as fertile ground for growth. Each downturn presents a unique opportunity to reassess and invest in high-quality assets that may have been overlooked. This perspective allows them to keep emotions at bay, nurturing a long-term vision that ultimately leads to more significant wealth accumulation over time. In this way, the Stoic investor's calm strategy becomes their strongest asset, providing a clear path through the tumultuous waves of the financial landscape. With each calculated move, they demonstrate a profound understanding that enduring success is built upon patience and resilience. Do not forget to like, subscribe and share.